Ladies and gentlemen, good day and welcome to Max India Limited Q2 FY24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajat Mehta, Managing Director, Max India Limited. Thank you, and over to you, sir.
Thank you. Good morning, everybody. On behalf of Max India Limited, a warm welcome to all of you on the Q2 FY24 earnings call. For the benefit of people who are joining us for the first time, I have with me my colleague Ajay Agarwal, who is the CFO for Antara Senior Living and also spearheads investor relations for the company. Ishan Khanna, who is the CEO for Antara Assisted Care Services. Sandeep Pathak, CFO for Max India. Ankit Kalra, CFO for Assisted Care. And Nishant from Investor Relations team, and of course SGA, our Investor Relations Advisors. We've already uploaded the investor release on the exchanges, and I hope everybody had an opportunity to go through the same. But let me start with you, giving you a summary of the quarter. It's been a great quarter actually. So on the residential side, in June, all inventory is now sold out except for one, which is occupied by our employee. 183 apartments have been handed over. It's a buzzing community now with 180 plus residents, which is also reflecting in the operations income that we have. And the satisfaction scores continue to be high, they're about 88%. On Noida, we have been saying for a long time, all inventory is sold out. Construction is on track, for all the 3 towers, and the finishing work has already started. And we are liaising with ARERA for approvals of phase 2. In Gurgaon, the definitive agreements in final stages. The massing and designing have been finalized. There will be about 288 units approximately that we will construct with about 0.7 million square feet. Bengaluru, definitive agreement is in the final stages. The design architect has been onboarded. That development will be about 1 million square feet, 480 to 490 apartments in that range. Hyderabad, we have also finalized the broad commercial terms, and hopefully in the next few days we will execute the term sheet as well. That's a large development, about 1.2, 1.3 million square feet, about 750, 760, kind of apartments on there. And discussion is also ongoing with landowners in Pune, Chandigarh, and in Chennai. Our target is to look at 1.5 million square feet of construction every year, and with the Gurgaon, Bangalore, projects in the final stage of negotiations, that is a clear possibility. On Antara Assisted Care Services, we already have 68 beds operational in Gurgaon. We have tied up 150 beds in Bangalore already. The fit-outs are underway. That's in Bannerghatta and Whitefield. And we're looking out for 50 more beds, in Bangalore. The scouting for Chennai already started, both in terms of, office space as well as care homes. And we're looking for about 100 beds more in NCR. On Care at Home, we already touched about 12,000 lives till date since inception. We have 8 plus services live in Delhi. Most of our revenue comes through now, critical care, physiotherapy, diagnostics, and caregivers. We have 5 service lines alive in Bangalore, including home critical care, and now preparing for Chennai launch. On Medcare, 800 plus SKUs available, including Antara labeled products, both for sales and rental. So far, we sold about 1,700, diapers packs through the retail channel and through Amazon. And our walkers are all the 5th bestseller on Amazon, with 15 to 20 now being sold daily. AGZ, which was our digital platform, let me retrace. This was a platform which offers expert-assisted products and solutions to help seniors manage their chronic conditions so they can age with ease and with joy. We had launched the first 2 conditions of, knee pain management and fall, watches. Now, there's been a great response. 17 products have been launched across the 2 chronic conditions. We already have 2 health studios, which are physical spaces where seniors can walk in and seek the expert consult. They are now operational in Delhi and in Bangalore, and the third one in Gurgaon will be operational before Diwali. The Amazon platform is alive. We also listed now on Flipkart, and great momentum built on marketplaces, particularly for smartwatches and for knee braces. And the work has been initiated now for next launches, which are planned, in Q4. Coming to the financial results now, on consolidated basis, we have achieved revenues of 55 crores in Q2 FY24, which is up from 46 crores in Q1, but down 10% year on year. This we explained last time as well, since we don't have any more inventory to sell, in residences. Therefore, for a while, you will see on a consolidated basis a dip in revenues, purely temporarily. As we start selling more communities, you'll find this number, ratcheting up. So while there's a healthy increase on all verticals, including Antara Assisted Care on consolidated basis, for a while you'll see the revenue compared to same period last year a little depressed. But our EBITDA has done well at a 1.5 crores in Q2 FY24 compared to a 7 crore loss sequentially last quarter, and a gain of 5 crores in Q2 FY23. The reduction, as you know, compared to last year is because we are now investing more in the growth of the business. There is a cyclic nature of revenue recognition residences, the OPEX for new business vertical AGZ, and the cost of scale-up outside NCR. I am confident the revenues will continue to show a steady growth. EBITDA performance will continue for a couple of quarters as we are making investments in strategic growth, where the costs are obviously upfronted. Treasury and monetizable assets stood at a healthy number of 530 crores September 23, which includes a significant treasury of 125 crores in Antara Purukul. This is what we had said last time. Antara Purukul continues to be PBT positive, cash positive, and has surplus now. The company has a very strong balance sheet with a consolidated net worth of 529 crores as of September end. On the residences side, our cumulative ITT collections of Dehradun stand at 676 crores in September 23, as compared to 592 crores in September 22, which is a 14% growth. And during Q2 FY24, we have sales collection of 30 crores. In Noida Phase 1, we have a cumulative ITT collection of 325 crores with 96% growth over last year and a collection efficiency of 96% plus. During Q2 FY24, we have sales collection of 41 crores, which is quite ahead of our plans. In terms of constructions, we're already on target, completed the block work for all 3 towers, and now the finishing and interiors are underway. On Antara Assisted Care, overall net revenue increased by 33% to 5.3 crores in Q2 FY24 from 4 crores in Q2 FY23. The care homes net revenue at 1.3 crores in Q2 FY24 is obviously adjusted for the inoperative care homes, which I explained last time, the change in strategy we had done, and we are now looking at full service care homes. Our revenues grew by 45% year on year. The contribution margin improved to -9% in Q2 from -12% in Q2 FY23, adjusting obviously for the cost of inoperative care homes. This is purely a temporary impact. It will get neutralized for the next quarter or so. On care at home, that vertical has done very well. We achieved the highest ever net revenue of 2.1 crores in Q2 FY24, grew by 27% over Q2 FY23, led by high margin service offerings and expansion to new geographies, particularly Bengaluru. Contribution margins also improved to 20% in Q2 FY24 from 14% in Q2 FY23. On Medcare, we also achieved the highest ever net revenue of 1.75 crores in Q2 FY24. It's a growth of 169%. Obviously, it's a small base, so the percentage number appears very high. The contribution margin at -2%, particularly because an impact in shift in channel mix from B2C to B2B. But this mix should stabilize in the quarters to come, and a steady contribution margin will be achieved as we start to more and more private labels, most products. On AGZ, the business was launched on August 21st as promised on the World Elders Day and achieved a net revenue of 11 lakhs in Q2 FY24, ahead of the plan, but a small number and too early, but very good traction. Some of you may have joined the call for the first time. Just want to reiterate, we are the only organization in India endeavoring to create an integrated care ecosystem for seniors. We have 5 business verticals: independent residences for seniors who are healthy but want to stay in a safe and secure community with like-minded people; assisted living or care homes for seniors who need more immersive, interventions; or have gone through a medical episode need to stay for a few months or a few weeks, with us. We also have memory care. We also have care at home services, which is critical care, diagnostics, X-rays, pathology, nurse giver, patient caregiver, at home. The market is $10 to $12 billion. To that, now please add what we are discovering on the AGZ side, that the senior spend, that market is about 40,000 crores of the spend of seniors on outside, hospital spend in the top 30 cities in SECI and SECB. So it's a large market as a long-term trend. We are already present in NCR. Bengaluru launched operations and looking for, now entering into Chennai very soon. As you know, the developments in Noida, Gurugram, Bangalore, Hyderabad are more condominium style. These are high-rise, and the care homes are meant for people, who need more immersive medical interventions, and memory care is meant for people who have neuro disorders like Alzheimer's, Parkinson's, and dementia. We also offer services in the convenience of the seniors' homes, and our Medcare vertical continues to expand its presence both in terms of SKUs, and we keep on doing small innovations. So we will launch a host of mobility and related products. For example, there's a walking stick we have looked at, which has a torch and a SOS alarm, for the senior. So we will keep on launching, such products across retail channels and across Amazon. AGZ, as I said, has got a very good traction. The seniors have options of either the health studio or WhatsApp video call or calling the expert home. Now, if you put all this together and start looking at the aspiration that we have of creating 8 to 10 communities, about 5,000 units, so about 10,000 people who will stay in these communities. They are in one sense captive audiences to us because they will have healthcare needs, medical equipment needs, chronic condition management needs, and therefore we'll be able to cross-sell where the customer acquisition cost is quite low. We commenced our journey in 2013 with Dehradun. Slowly we have expanded, done well on both on sales and collection perspective. I already shared the cash surplus of 125 crores that we have in the community. In Dehradun, 180 people staying. And we have leveraged the learnings to make sure that what we launch in Noida, Gurugram is an appropriate model suited to the market at a price point which is, good product market fit. And we have, agreements with developers in terms of, developing, and our equity participation is not that high. We are pleased to inform you that besides Gurgaon, the commercial negotiations for Bangalore are now closed and documentation in the final stages. The Bangalore facility is very strategically located. It's about 10 to 12 minutes from the new airport. It's part of a large 200-acre development in which about 460 to 500 units will be constructed, total built-up area of 1 million square feet. There are already in that community about 2 senior living communities fully operational. The Gurgaon one is on the Dwarka Expressway, which is the new upcoming area for NCR. Again, part of a very large community, and this will be our first attempt at an intergenerational community for which we'll be providing all the senior living know-how and expertise to a developer. The massing and design for Gurgaon has been finalized, about 288 units with 0.72 million square feet to be constructed. Recently, we have also closed our commercials for a very nice location in west of Hyderabad. The non-binding term sheet is scheduled to be executed soon, post which we'll start our due diligence and other processes, and aggressively scouting opportunities in Chennai, Pune, Goa, and Chandigarh to create the pipeline for the future. In Antara Assisted Care, so far served over 15,000 patients. On the medical equipment side, about 800 SKUs, including Antara labeled products, some of which are also available on Amazon, Flipkart, and 1mg. Closely working with IIT Delhi, as I said, to continue to innovate based on seniors' needs on these products, so they're able to find value. Our customer voice and feedback continues to be healthy, is 94% plus, and 70% renewals, which is a great, belief that customers have. In fact, if you look at Dehradun, 40% of resident referrals only. Again, one more vindication of how customers believe in Antara. And just to summarize, as I said, hopefully we'll be in 8 to 10 cities over the next 5 years with residences for seniors, 4,000 to 5,000 units, about 2,000 beds of care homes, memory care homes, 50 plus health studios in both physical and online presence, across Northwest and South clusters. I repeat, our focus is 4 million customers in Sec A, Sec B across these cities. And obviously, customers who stay with us in the community are repeat customers of various products and services. So that is the entire story. We are quite happy with the quarter, very focused on executing, aware of what we have to execute, and hopefully we'll be able to meet all the commitments that we make to our investors. So I'll stop here and welcome any questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and 1 to ask questions. We'll take the first question from the line of Harsh Kandanani from Ionios Alpha. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on a good set of numbers, especially in care at homes and Medcare. I just had a couple of questions on the care home business. Have we added any beds in this quarter in the care homes business, and does the outlook for FY24 remain the same?
No, in this quarter we have not added beds because the beds that we identified and finalized in Bangalore are under fit-outs. They are built to suit, about 150 of them. They become operational in Jan of 24. The outlook remains the same. We will achieve a number of 360 beds by March 24 as promised. We have 50 more beds in site in Bangalore, looking out for 50 odd in Chennai, and we already under discussion for 50 in Noida. So we will meet our guidance. And these beds will become operational in Jan 24 because in Bangalore they are basically built to suit. So fit-outs are happening now.
Got it, sir. And just another thing on AGZ. Sorry, I missed which products did you mentioning in your opening remarks which are gaining traction. And I understand that this business is just, quite nascent. So could you please quantify how much impact on an EBITDA level would this business have probably in this quarter and, over the next, say, 2 to 3 quarters?
Yeah. So as I said, this AGZ is a physical platform addressing chronic conditions. Initially, we launched 17 products across 4 categories addressing, knee pain, as well as fall management. And the products that are getting traction on Amazon are basically the knee braces, which are knee caps, which help you redistribute the weight of the knee and give it support, and smart watches. These are gaining, very fast traction. As far as the EBITDA is concerned, as you understand, it's a new business, and therefore it will consume, capital and show a negative EBITDA before it starts to break even. I think FY24 it's 30 crore, loss that we have projected, for AGZ, which is because most of the costs you'll appreciate in this, it's a D2C business are basically marketing and manpower.
Got it. Great. If there's anything else, I'll just come back in the queue. Thank you.
Sure.
Thank you. A reminder to all the participants, anyone who wishes to ask questions may please press star and 1. We'll take the next question from the line of Charanjeev Singh from Family Office. Please go ahead.
Hi, good morning and thanks for the opportunity. My question is regarding our homes. So what I learned is that while we launched Dehradun, it was a kind of premium property. It was 14,000 per square feet. And thereafter we said that we shall be staying in more in mainstream, something between 7,000 to 10,000 square feet. My question arises from there. I happened to visit the site of Gurgaon, there the towers are coming. So that was unrelated visit, but I saw that site. That site is at a very premium location. So are we putting up towers to the opportunity, the apartments which we shall have there? would be their premium location apartments, or it will be mainstream? What is the approach of the company? That should we segregate a premium segment as mainstream segment, or we shall remain in mainstream? That is the basic question.
Yeah. So as I've been saying for many quarters, we are now in more urban locations compared to Dehradun. Our objective is to achieve a product market fit. So whatever the market needs based on research in terms of size and whatever it can afford in terms of prices, we will do. For example, we had launched Noida at 6,500, 7,000 many years back, all inclusive, price. As we sold, we discovered that the price, the market could take more price revision. So the last price we sold was 10,500, 11,000 rupees, right? Similarly, in Gurgaon, we will benchmark what the market price of like developments is nearby, though we are a senior focused player, so there's a premium that we also demand over the market. Same thing in Bangalore. Bangalore needs smaller sizes, right? And the price point is very different. So to answer your question, we're looking at good product market fit, both in terms of capital cost and the monthly maintenance that seniors have to pay. So Noida, is about 7.5 to 8 rupees in 2024 per square foot, right? So we'll be guided by what the customers want in terms of size and what the market, wants in terms of price. But we'll be in that ballpark number as we go along. So Dehradun is today, resale is selling at 18,000, 20,000 square feet. So we're not attempting to look at, creating Dehradun again. It's a one of its kind. We may create something else as we go along, but whatever the market, can absorb. So if Gurgaon demands a price in that locality of about 17, 18, 16,000, so be it, right? But Bangalore, I know, will be about 7.5, 8,000. So it really depends on the market.
Okay, because that market is premium market, the area where your plot is there. Yeah, great. Thank you. Thanks for the answer.
Thank you. We'll take the next question from the line of Namit Arora from Ingrowth Capital. Please go ahead.
Yes, thank you for the opportunity. My question was, within the broad sort of area of senior care, do you feel that you are in most of the verticals that you need to be today, or are there new initiatives within the broad focus of the company that you're looking to add over the next few years?
So actually, we have done a comprehensive study of what seniors need and what the value pools are. So both are important, right? What seniors need and where the value pools lie. So to us, the biggest value pools were around residences in seniors, where the CII report said India will need about 250,000 units, and the current supply is only 2025. That was one. Second was assisted living or care homes, which is $1.1 billion. Care at home, $3.9 billion. Medicare, about $750 million. And now AGZ is a 47 crore market. So we are, so we went and did a study. So at this point of time, we are scaling up and executing across these 5 verticals. At this point of time, we are not able to see anything that we have left out. With AGZ coming in, that is answering the question of handling chronic disease as well. And please remember, we just launched 2 conditions. We will keep on launching conditions as we go forward to cover the entire spectrum of chronic diseases for seniors depending on market size. So I think at this point of time, our hands are quite full. But for some other needs, we are quite open to partnerships. For example, we will never provide online financial services for seniors. But if there's a partner available, we'll do a tie-up with that partner. So we are focused on the 5 verticals. Whatever else that seniors need, which is a big market opportunity, if at all, we'll do a tie-up. But at this point of time, this is a big execution task for us going forward.
I got it. Very helpful. Thank you for a detailed answer. My second question was around marketing and branding. Now, given the pedigree of your group and institution and the legacy over many decades, do you think that you need to sort of work further on marketing or branding only for this broad category, because the general take-up or the awareness in India may be somewhat lower than what you might expect? I'm just trying to see how do you leverage the legacy and goodwill of the group over the last few decades with the market reception. Are there any thoughts around that? Thank you.
You're absolutely right. That's a great question, actually, because what we are doing, part of it is awareness, part of it is category creation. For example, residences, there is no need to create the category. People well understand the need for independent housing for seniors, so it's more an awareness, right? And the good news is that as we entered, Bangalore, we found the awareness to be a little higher than what we expected. In fact, we also found quite a few people using our name, which we had to then take some legal action. That's on the lighter side. But on care home, for example, it's a category creation job. On Medicare, it's more distribution and awareness. So you're absolutely right. We are at it. A lot more work needs to be done. So we recently also released a brand film launching Age Easy. You can have a look at it. It's got a fantastic response from all social media handles and YouTube as well. So a lot more to be done on that side, and we are at it. We'll continue to focus on that. In Age Easy, as I told you, a large proportion of the spend is actually on marketing. But that's something we need to continue to do to leverage the legacy, as you said.
Got it. Thank you very much for your detailed responses to all my questions, and all the very best to the entire team. Thank you, sir.
Thank you very much.
Thank you. Participants who wishes to ask questions may please press star and 1 now. We'll take the next question from the line of Rano Deep from MAS Capital. Please go ahead.
Yeah, thank you for the opportunity. A couple of questions. So on the intergenerational project that's coming up in Bangalore, I wanted to understand, do we have any global case study of this model being successful, or is it going to be something new that we have conceptualized for Indian market?
So that's coming in Gurgaon, actually, intergenerational. Bangalore is only a senior focused development, but in Gurgaon it's generational. And this is the feedback we have been getting when we started our journey into NCR, that seniors are looking for more life around them than just senior folks. And some geography they also look for if their children can stay at a nearby distance, right? So that's the attempt we are making. There are international examples available, but the reason we went into this was based on the feedback we received from the market. It is not an idea that we conceived. The feedback came to us saying, why don't you do intergenerational? Because it would be a nice thing for seniors to stay in a buzzing community, and maybe the children can stay nearby. So that's the attempt we are making in Gurgaon. Bangalore is a senior focused development.
Okay, fair enough. My next question was on the care at home with 1,700 patients served in this quarter, Q2 FY24. Where do you see this getting sustained? This is the reason I'm asking this question is in the backdrop of there are firms, to name it, Imoha, they've just recently been funded in the Series B from big players like Virodhas of the world, right? So are we ramping up care at home, and where do you see the numbers stabilizing on a quarterly? What kind of targets do we have, number of patients that we want to serve?
Yeah. See, as I said, care at home was always a completion of service. We were uniquely placed to offer all the integrated services because of our background of the experience of managing real estate infrastructure, hospitality, and in healthcare. We are very focused on high margin services. So if you look at our contribution margin from 14% up to 20% now, that's our focus, which is critical care, diagnostic, physiotherapy. That's our focus really. So as we launch new cities, we will launch this service. It's a completion of service. We are more focused on residences, care homes, on mid-care, as well as, on Age Easy now. So this is something we want to do, but in a very healthy contribution margin. So this is about, and in critical care, we now achieved about 54% growth on a quarter-on-quarter basis. So we'll focus on high margin lines, quite aware of what you're mentioning. Also quite aware of where others have struggled to make contribution margins. So it's a fine balance we will do. And the other point I'd like to reiterate, as we set up communities, the care at home service becomes, a captive customer for us. So that's why we'll be able to drive better margin in the future. So we want to continue the journey and allocate capital, but in an appropriate manner, not being too bullish about it and therefore ending up the same way others have ended up in negative contribution margin.
Sure. Fair enough. So my last question was with respect to Age Easy. Wanted to understand, will there be an element of engagement? There are various tech platforms that are venturing into the space where they're focusing on the engagement bit for senior citizens, right? So will Age Easy have an element of engagement platform where maybe a customer who is not on any of the, or who is not consuming any of the products of Max India, but in future, basis the good experience that they get through one of these engagement platforms, eventually looks at all the offerings of Antara. So any thoughts around that?
Yeah, sure. Very clear thoughts actually, and very clear position on that. We have studied various platforms as we started to develop AGZ. As you know, it's been a one-year research we have done. And in our, insighting from the market, both in India and in the US and some parts of, Asia, we found that customers seldom pay for a subscription service. And anything which is not linked to a product, it's very difficult to make a good business model out of it, right? So we are very focused on products and services and very focused on a phygital platform. That's another learning that we have had, much like Lenscard, that you have to give the option to the seniors to either come into a health studio, do a WhatsApp video call, or call an expert home based on their convenience. So we're offering a phygital, presence, but very focused on products and services and solutions, which will help them age with ease and joy. Engagement is a loosey-goosey stuff while people are doing it. It's more of a community creation, initiative rather than a business model. So we might do it for community creation or tie up with people who are doing it to get access to customers. But we'll be focused on products and solutions for chronic disease management.
Sure. Thank you and appreciate all the answers. Wishing you good luck for the next quarter. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask questions now. We'll take the next question from the line of Ankit Pandya from InCred Asset Management. Please go ahead.
Yeah, hi. Thank you for taking my questions. So I just have two questions on care homes business. So sequentially, I've seen that the revenues have been flat sequentially, and even the inoperative beds are there, that has also increased from 6 beds to 62 beds. So just can you give some color on that front?
So, no, inoperative beds have not increased. So let me explain that a few calls earlier. So we tried our hand at an operator model where we said that we will tie up with a guest house operator who will provide the F&B and the housekeeping services. We'll provide the care services. However, we discovered that the SLAs and TATs were not working. We were not able to maintain the quality. And therefore, we said we'll close down. We'll only operate full-service care homes. So there are 68 beds operational. The inoperative ones have been shut down. And now we are increasing capacity. The reason you see the overall revenue flat because we haven't added capacity this quarter, which will get added this quarter. As I explained earlier, 150 beds in Bangalore will start operating from Jan, of 24. And on the lookout for, more beds to end at 360. But if you look at the Gurgaon care home, the occupancy has gone up, at this point of time. So there are about 22 move-ins in Q2 that we had in versus 30 move-ins in Q1, and the occupancy now in September actually was 61% in Gurgaon.
So, except for Gurgaon, the main reason is from the change because of not outsourcing the beds. So that is one of the main reasons. Since the last 2 quarters, it has been relatively flat. We can assume that.
Outsourcing the beds? No. So we're not outsourcing any beds. As I said, the Gurgaon is a full service model where we operate everything from the care services to physiotherapy to F&B to housekeeping. The operator models were where the housekeeping and F&B was done by the guest house operator. We were doing the care services. That model we have shut down, right? But full suite model is what we are doing now.
Okay, fair enough. And so just on the operating profitability also of care homes, so now we have a visibility of guidance of 2,000 beds that you want to add in the next 2-3 years. Given that, that will also be requiring marketing spends also. So how should we look at profitability from your onwards? Because given that the base that we have right now, the number of beds and significant addition, so in the next 1-2 years, how should we look at the profitability? Do we expect break even by FY25 or FY26 onwards for care homes business?
Correct. So 2,000 beds is the aspiration we have over the next 5 years. Now at a unit level, each care home should break even in the 7th or 8th quarter at a 50-55% occupancy level. The average revenue realization per day we are seeing now is about 4,300 in Gurgaon, but could be different in Bangalore. And this also is dependent on the price escalations that we go through. We're seeing a very healthy. So on a unit basis, you should watch out for in 7-8 quarters is the individual care home breaking even, And this is the contribution margin slowly going up from 2-3% to about 20% in 5 years' time when the care home fully matures. So that's the model you should follow. And the revenue is about 12 to 15 lakhs a bed. So if you multiply now 2,000 beds with this number, you get a 250-300 crore number. And the EBITDA margins, the contribution margin at a unit level will be 20-22%, but EBITDA margin will be 12 to 14% on a consolidated basis. And the break even, depends on how we open, how fast we open. But the mature care home will do a break even in the 7th or 8th quarter.
Fair, sir. Thank you. That's it from my side.
Thank you. Before we take the next question, a reminder to all the participants, anyone who wishes to ask questions may please press star and 1 on their touchtone phone. We'll take the next question from the line of Karan Mehra from Mehta Investments. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. A couple of questions from my end. So in Dehradun, there is one unit occupied by a doctor. So just wanted a sense, like, will it be sold or will it remain like that? And if you can throw some light on what is the surplus that will come in FY25 from Dehradun?
So that unit also will be sold. Technically, it is sold, but not in the last quarter. So already in the discussion, it will be sold. And in FY25,
this is Ajay. In FY25, we are targeting that in financial year 23-24, all our revenues will kick in as far as the residences leases are concerned. So FY24, the revenues from maintenance, which will be in tunes of approximately 12 to 15 crores. Plus, there will be some income which will be coming for the resale marketing fee, what we are going to earn on some churn which is going to happen in the residences side.
Understood. And so how is the memory care home performing, and any plans on where are we going to open our next memory care home?
Memory care home at this point of time is an occupancy of 30%, and we are looking at how to increase that. Yes, we will open more memory care homes, but at this point of time, for the next 2 quarters, our focus is on care homes in Bangalore and Chennai to be able to hit the 360 beds. So till the time we hit an occupancy of 60% in memory care, we won't open a second one.
Understood. Sir, that answers my question. Thank you and all the very best.
Thank you.
Thank you. The next question is from the line of Charanjeev Singh from Family Office. Please go ahead.
Yeah, thanks for the opportunity. So my question is regarding care homes. Since it's a new category altogether and we, as investors, we don't have that much exposure to this category and touch and feel of this thing. So is it possible for us as investor to visit this place, to visit a place in Gurgaon, say for example, we are here and based in Gurgaon, to visit your care home so that we can understand the product as it is, that what exactly the product is?
Of course you can. Please get in touch with us and we'll organize a visit. No problem at all.
Sure. Thank you.
Thank you. The next question is from the line of Akshay Kothari, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. So what would be the average age of the individuals living in the senior living at Dehradun?
Dehradun will be skewed, will be about 65 to 75, that kind of band. Noida a little younger, because more in the urban area, but Dehradun about 65 to 75.
Okay. And when we are selling homes in the senior living, do we have a criteria for certain age individuals only to be sold?
Yes. So for each community, we are saying you have to be minimum, one applicant has to be minimum 55 years as on date of possession. So you could be 50 years when you're applying for it takes 3-4 years for construction. So one of the applicants has to be in that age bracket.
Okay. And so what is our capital allocation plan for the cash we are having currently?
So of the 530 treasury plus multiple assets, about 200 is what we thought of for senior living communities, and the balance for Antara assisted care, including ADZ.
Sorry, I could not get you. Can you get that?
200 crores for Antara senior living and about 300 plus for Antara assisted care, including ADZ.
Okay, that's great.
And all these are based on estimates of growth, please, so I must caveat it. We will allocate capital depending on the growth and scale that we see. But that's a broad allocation currently.
Okay. So, just on that senior living Noida construction which we are doing, our equity contribution would be around 28 crores, right?
Yes, it will be 28 crores.
So, I just do not understand how come our IRR is coming around only 15 to 17%. It should be much more, like we are taking a lot of external funding and everything would be funded by customer itself in a way.
Yeah, you are right in a true math sense, but particularly in Noida, what has happened, we launched this project in the time of COVID, and then because of the COVID sinking in, we got delayed by a year or so. And at that time, when we actually started constructing, all the commodity prices increased quite significantly. So as a comparative, the steel went from 45 to 72 when we started constructing, and so that practically ate all the revenues of phase one. Now the market is booming. We are hopeful that in phase two we'll be able to recoup some of the IRR drops, and that's why we have kept a stable, conservative number, and all efforts are there to ramp up this number to the best possible.
Okay, understood. And just on that, what is the guardrail for IRR which we generally have in these projects?
20% is a number below which we will not like to sign off any arrangement.
Okay. And in future, we are going to be in this business of senior living also. So in future, do we look for more of vertical development, or we look for going into horizontal development like the one in Dehradun as well?
See, frankly, as an aspiration, horizontal looks better. But unfortunately, in the India dynamics, the FSI norms and the FAR utilization do not allow you to make too much of a luxury, because that compromises significantly to the landowner's share. So each geography will have its own nuances. I intuitively feel geographies like Pune and Goa will more have a horizontal kind of a view, while geographies like Hyderabad, Bangalore, Chandigarh, Delhi would be more high-rises.
Okay. Yeah, I think that's it from my side. Thanks and all the best.
Thank you.
Thank you. We'll take the next question from the line of Yug Mehta from AP Capital. Please go ahead.
Yeah, thank you for the opportunity. EBITDA margin just called.
Sorry to interrupt, Mr. Mehta, your audio is not clear, sir. May we request you to use your handset, please?
Yeah, am I audible?
Yes, sir. Please proceed.
The EBITDA margin, EBITDA has fallen sharply on year-on-year basis. Can you attribute any specific reason for the same?
As I said in my opening comments, the reason is because we don't have any inventory to sell. The revenue has not gone up, but the capital required for growth is being spent, both in terms of all verticals of Antara assisted care. So that is the main reason why the EBITDA has fallen. But it will get corrected as we start to have more revenue when we launch new residence projects and the new beds in Bangalore. This is a temporary phenomenon. It will go away in a couple of quarters.
Okay. Are there any plans to enter into Coimbatore, as it's a huge market already operational in that city?
Part of the future plan, but at this point of time, focus on Bangalore and on Chennai till the end of this financial year. And once we have fully populated these two markets and have got what we wanted, then we look at the other market.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Rajit Mehta for closing comments. Over to you, sir.
Thank you very much. Really appreciate the questions. It really helps us put our story out there. As I said, it's been quite an exciting quarter for us. The focus is on execution, scale up and growth to be able to meet the commitments that we have already made to you. As I explained last time also, I'm reiterating that you'll find the EBITDA so because of various reasons of no inventory being there to sell on the residency side, and the investment we are making in growth is a temporary phenomena. It will come off. We remain committed to create the integrated care ecosystem for seniors. We are still focused on the 8 to 10 community, the 4,000, 5,000 beds, that we want to do, the 2,000 beds in terms of care homes that we want to do, and making sure that the other care home, Medcare equipment and AGZ are launched, across, the cities. So that's our focus. So thank you very much for your support. Really appreciate it.
Thank you very much, members of the management. On behalf of Max India Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.